Stocks notched some gains after US President Donald Trump suggests he may go easier on tariffs to be announced today than earlier expected. Realty and consumer durable stocks gain while utilities and energy are the big drags.
Even as US President Donald Trump is expected to announce the imposition of reciprocal tariffs today, trade experts say India may be able to offer some concessions without hurting the Indian industry to blunt the impact.
Even as reciprocal tariffs loom, India's crude oil imports from the US have jumped 67% in March, suggesting that President Donald Trump's efforts to boost American oil sales are having an impact. Oil Minister Hardeep Singh Puri had earlier hinted that India will increase its energy cooperation with the US.
Hyundai India's March sales numbers beat estimates, riding on strong growth in the SUV segment. Tata Motors, however, disappoints with a dip in the CV sales and a sharp drop in EV offtake.
Peak of net interest margins of banks is behind us as savers have matured to become investors. Veteran bankers Dinesh Khara, SS Mundra and Srini Vardarajan tell CNBC-TV18. Separately, bank stocks gain as bond yields fall sharply after the RBI announced a massive 80,000 crore rupee bond purchase in April.
Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Hormuz. Hey Hormuz, good to be on the show. Had a good time for the markets, given all the uncertainty. At least we pulled back some of those losses that we saw in yesterday's trading session.
Oh, absolutely, and you would want to be that. You wanted to be that way as well as you close down on today's session as well, right? But yes, clawing back some of the losses that we had in yesterday's trading session is the index 23,250 is where the index is currently placed at, slightly off the highs of the day, but still holding on to some bit of gains. But of course, the Nifty Bank, as we just highlighted, is the one that is leading the charge, almost 400 points higher on the index, convincingly above the mark of 51,000 as well. And it is the Nifty Bank that is ensuring that the Nifty stays in the green, because it was HDFC Bank and ICICI Bank that were the principal culprits to the downside in yesterday's trade. And in today's session, it is the Nifty Bank that is ensuring that the Nifty stays in the green, Nigel.
Well, that's right. I think the biggest positive today is the advance decline ratio, right? When we started off trade, there were way more number of stocks that were declining than advancing. And now that's done a quick U-turn, because at around 10:30 a.m. when, I was on the show, it was pretty much even Stevens. Now just take a look at that. You have two stocks that are advancing, one stock that's declining. So clearly the broader market mojo is back, and that's reflected in various stocks. One stock that's doing pretty well and seen a bit of an uptake is Tata Steel. Now, the reason is that there is a positive read-through that's come because of what ArcelorMittal has done. They've gone ahead, they've raised their HRC prices by around 20 euros, which means that, in fact, Tata Steel as well could replicate some part of this. And that's why the street is reading this as a positive read-through. The reason that ArcelorMittal has said that they've gone ahead and increased prices by close to around 20 euros is because there's increased inquiries in booking, and also there is a safeguard review that will protect them from imports coming in to the European region. So put all that together, a bit of a positive read-through for Tata Steel because of what's happened at ArcelorMittal. Let's focus on a few more stocks though. V-Mart, that's buzzing in trade on the back of a good Q4 update. In our special segment, Inside Edge, Vinny focuses on the stock. Vinny?
Yes, so we are keeping an eye out on V-Mart Retail today, and Q4 business update, when you talk about it, a good update that's come in, right? Last quarter also they managed to see that recovery and growth coming in, and this time that momentum has continued. Revenue growth this time in Q4 is what they're seeing is 17%. SSSG growth, which is important, that has come in at 8% for Q4, and for the full year that's come in at 11%. So that double-digit growth which they're given a guidance of in terms of SSSG, that is also something that they have maintained. 53 stores is what they've added in FY25, that given the target between 50 to 60. So yes, in line with the estimate of what they had spoken about. And revenue per square feet, this is from Motilal Oswal, what we're picking up, that has seen an improvement as well. This time it's 5.4% increase versus last year at 1,825 rupees. Management is quite bullish in terms of the commentary that's come in. Why? Because they're saying that now rural has started seeing a recovery. Mass consumption, that has started seeing an uptick as well versus Q3 and the last year is what we were talking about. Seeing seeing improvement in terms of demand trends. UP, Bihar, that's the side tier 2, tier 3 cities where they're seeing an improvement. So that is something that has improved. Volume growth has seen an improvement as well. And they're expecting next year in FY26 around 60 to 65 store additions. Better consumption trends that they expect to see a pickup in terms of rural areas, and double-digit growth in terms of revenue in FY26 is what they're talking about. Today, the stock is up 5%, but let's also listen in to what the management had to say furthermore in terms of the target for FY26.
Seeing the mass consumption and the rural consumption inching up a little more and becoming a little better than the last year. And that also has driven some kind of consumption, especially in markets of Uttar Pradesh, Bihar, where we were struggling fundamentally. But I think, yes, volume growth is something which is very enlightenment. We're really getting good news about that volume growth, and this is also being led by fashion, because there's a lot of fashion change which is coming to the market. We expect some more consumption coming in especially from the tier 3 and the rural areas. That is where we believe if those consumptions are back and monsoon remains good this year as well, we would definitely clock once again almost a double-digit growth. That is what we should expect from our team, and that is what we are all getting prepared for.
That was Insight Edge on V-Mart Retail. The stock doing very well for itself, 6% higher now on the stock, near the highest point of the day. But a sector that has been in focus courtesy the fall in the Nasdaq, the uncertainty surrounding the Trump tariffs, is IT. IT stocks today are doing fairly okay for themselves if you look at the mid-cap IT names. But JP Morgan has come out with a note on the sector saying that the negatives here are priced in. Rima is here with more details on that. Rima.
Thanks so much for that. So JP Morgan Indices says that with the NSE IT index down 14% on a year-to-date basis, a lot of the negatives are priced in, and they will play for a relief rally on beaten down names. So they prefer stocks like a Coforge, Infosys, KPIT Tech, and Tech Mahindra. Stocks that they will avoid in this quarter include a TCS, Wipro, HCL Tech, Tata Tech, and a Tata Elxsi. They've also downgraded an HCL Tech from an overweight to a neutral because they're saying Q4 is going to be soft. The deal momentum has been a bit subdued, and they're anticipating the company to report lower growth in FY26 versus FY25. So they've downgraded the stock to a neutral and lowered the target price to 1700, while they have upgraded Tech Mahindra to a neutral. And here the thesis is that at a time when growth is challenged, Tech Mahindra is likely to report an improvement in margins, and that will hold the company in good stead. They've set a target price of 1500 for Tech Mahindra. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, CSB, that's surging in trade on the back of a robust showing in the Q4 business update. Abhishek joins us to fill us in. Some details on that. Abhishek?
Well, Nigel, the sequential growth in the entire business line, whether deposit, CASA or advances, have been pretty robust for CSB Bank. Take a look at deposits. They are up 24% YOY and about 10.3% quarter-on-quarter. Now, calculation shows that CASA ratio has improved 10 basis points quarter-on-quarter, suggesting that the CASA, absolute value growth is more than 10% on a sequential basis. So the gross advances are up 29.5% YOY and about 10.1% quarter-on-quarter. The gold loans have grown by nearly 8 to 8.5% quarter-on-quarter, which suggests that the gold loan share has declined on a sequential basis. However, ex-gold loan, the loan book has grown by 25.3% YOY and 11.65% quarter-on-quarter, which suggests that they have had strong business momentum in Q4 FY25 when compared to Q3 FY25 numbers. Back to you.
All right, Abhishek, thanks a lot for that. CSB Bank also doing fairly well for itself today, 3.25% higher on the stock in today's trade. We take a short break. Up next, we get you more on the markets and specific stocks on the other side. Stay tuned.
With the baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
Welcome back, and on to the big event which everybody across the globe, across all global markets are waiting for with bated breath is the so-called Liberation Day announced by Donald Trump, which is the 2nd of April. And investors are also awaiting this latest tariff rollout. CNBC's Megan Casella is joining in with more on this.
David, I was just inside the White House talking with officials on this to try to bring you guys the latest. And what I can tell you is that deliberations on exactly what tomorrow will look like are still ongoing. There are still meetings scheduled today where they will be talking through the different options that are on the table, and no options have yet been removed from the table. There's 3 main options that the president is considering here. One is a blanket 20% tariff on most all imports from most all countries that are sending goods into the U.S. Another is sort of a tiered basis, meaning that countries can fall into one of maybe 3 buckets. There will be maybe just 3 different rates and tiers of countries depending on the trade barriers that they have up. The third is the option we had previously been talking about the most, sort of a customized country by country approach. One White House official did tell me that that blanket 20% tariff rate, that's still back on the table, but that appears less likely than the other 2 at this moment in time. Here's what we know about tomorrow. We know it's going to be a 4 p.m. ceremony in the Rose Garden. Most cabinet officials in attendance, some workers, some manufacturers, some CEOs have also been invited. So we'll see who's there in the Rose Garden tomorrow. We know that the goal, they say, is country-based tariffs, not sectoral. So though there's been a lot of talk about pharmaceuticals and semiconductors, we do expect those at this point to come later and not to be announced tomorrow. And then one final thing, guys, is that as big as these reciprocal tariffs could be, they are just one piece of what we're getting tomorrow. And I don't want viewers to forget that we're also expecting the pause on Canada and Mexico imports to be lifted. We're also expecting those secondary tariffs on Venezuela to take effect, and the auto tariffs will take effect, guys. So no matter which of these options on the table that they choose, a big day tomorrow, no matter what, guys.
Well, and sources tell CNBC-TV18 that the U.S. has received a far-reaching offer from India to bring down the average tariffs. Parikshit's the one who's bringing us those exclusive details, and he joins us to fill us in. Take it away, Parikshit.
Well, yes, we've been hearing from top sources privy to the negotiations between India and U.S. that India has offered to bring down the average tariff rate down. Now, the biggest complaint of the U.S. government and Donald Trump was that U.S. average applied tariff is around 3.5%, whereas India's average applied tariff is way higher than 12% or 13%, and it needs to come down drastically. That is what Donald Trump's demand was from India. So we believe that the negotiations over the last few weeks have gone off well, and sources tell us India has made a very far-reaching offer in terms of providing tariff concessions to the U.S. products and also on reducing non-tariff barriers. There have been some positive negotiations when it comes to reducing non-tariff barriers such as quality control orders. Whether access would be given in the agriculture sector, that remains to be seen. But voices here in the Indian government and also certain experts have been saying that it's high time we do open up certain sectors, product lines within agriculture and dairy also for the U.S. market. Having said all of this, there are 3 or 4 scenarios that are possible tomorrow when Trump makes that announcement in the Rose Garden on reciprocal tariffs. Number 1, India-U.S. reach an agreement on tariff reductions, and this leads to suspension of any reciprocal tariffs on India for a temporary period. Number 2, there is progress in India-U.S. trade talks, and this leads to a mitigation of reciprocal tariff impact on India, and the reciprocal tariffs on India are lesser compared to other nations. And thirdly, reciprocal tariffs hit all nations, including India, without exceptions and without any consideration for the bilateral negotiations that have happened between India and U.S. So these are 3 possible scenarios we're looking at, but the signs so far have been encouraging as far as the trade negotiations between India and US have gone.
Encouraging signs, Parikshit, thanks a lot for that. That is also something that the markets would appreciate hearing, encouraging signs. But of course, the final outcome is something that is awaited, and we will be on top of this from 1:30 a.m. only on CNBC-TV18. You can catch the live coverage of Donald Trump and his announcements on the reciprocal tariffs tonight at 1:30 a.m. But his push, Donald Trump's push, of course, for increasing energy exports has seen an impact and that's because of the sharp increase that we have seen in crude oil imports from the country. India's crude oil imports from the US have now risen 67% month on month to 2.44 lakh barrels per day in March. And that is, of course, amidst President Trump's efforts to boost American energy exports. In February, India had exported close to 1.5 lakh barrels per day of crude, so a significant increase compared to the month of February. And in fact, earlier this year, in February, of course, Oil Minister Hardeep Singh Puri had hinted that India will increase its energy cooperation with the US. Listening to excerpts from that conversation the minister had with CNBC-TV18's Shireen Bhan at the IEW 2025.
Energy cooperation, President Trump saying that India should buy more LNG, more energy from the US. He's even put out a number there saying that should increase from $15 billion to $25 billion. I wanted to get your comments on that. We have spoken about this previously as well. Do you believe it makes sense? It is something that we should actively pursue and build on.
Energy cooperation between the United States and India was widely expected to figure in the bilateral talks. If you read the joint statement, if you read what the President said, what the Prime Minister said, that's evidence. And I think there is already fairly substantial energy cooperation. The fact of the matter is India needs more energy. We have long-term deals on gas with one country which was there till 2028. You've signed another 20 years there. We are in the market for more gas. We have a stated policy of taking it from 6% to 15% in the energy mix. And I think we have a very substantive relationship with the United States, mostly on gas. I see definitely those quantities being addressed for increase.
The Oil Minister Hardeep Singh Puri in that conversation in February of this year. By the way, the Nifty has seen some bit of an up move in the last few minutes. 125 points higher now on the index, back towards the highs of the day at 23,300 is where the index currently stands. Where is the index headed ahead of a major event? Pritesh Mehta of Yes Securities joins in on the other side with his views and some trading strategies as well. Stay tuned. Welcome back. And as Nigel had highlighted earlier in the show, that the advance decline ratio has now firmly moved in favor of the advances. There are a lot of movers in the broader markets. Kalyan Jewellers is one of them, 7% higher now on the stock at the highest point of the day. Also at the highest point of the day is Poly Medicure, 6% higher on that stock as well. So good going for a couple of these names there. Kalyan Jewellers, as you can see, some strong moves seen there, and Poly Medicure at the highest point of the day as well. But good time to get a quick chart check as well. Pritesh Mehta, the Executive Vice President at Yes Securities, is joining in now. Pritesh, good afternoon. Thank you for joining in. What do you do ahead of a massive event like this? Would you like to stay on the sidelines, then wait for the event to play out and then put in a trade? What are the charts indicating though for the Nifty as of now? And what are your stock recommendations as well for the afternoon?
Good afternoon. In this kind of scenario, we need to stick with the leaders, with the outperformers. We had a solid rally in the month of March. We are talking about a rally of almost 6%, even more than 6%. But after the first round of rally from 22,000 to 23,800, I'm yet to see a turnaround in Nifty's relative strength against the other asset classes. So when you talk about relative strength, I need to see a turnaround in the ratio of Nifty versus gold, Nifty versus silver, or something like GSEC versus Nifty. So I'm not yet to see Nifty's outperformance kicking in against these precious metals. So that would be the time I would be more gung-ho, more excited of going all out in Nifty. But during this point of time, ahead of the critical event, I think we need to stick with the big players, with the solid outperformers, rather than going gung-ho in the markets, in the broader market space.
What about specific stocks, Pritesh?
So we have two recommendations. First is buy on Exide Industries. The stock has come off of the lows in last couple of weeks. Thereafter, we have seen formation of bullish anchor column. Stock is trading above this 10 column average. and has given a double top buy. So buy for a target of 400. The stop loss would be around 360. The second recommendation is buy on Indian hotels. Now see our customized hotel restaurant index has bounced off the point of polarity zone. This particular stock, Indian hotels, is outperforming the customized hotel index. So on a standalone chart or relative basis, it is showing strong, is showing strength. So buy for a target of 930. Stop loss would be around 800.
Okay, all right, Pritesh, before we let you go, Indices Bank, any view out there? The stock saw a sharp correction, 25% in a single session. And from there, it's seen a gradual recovery. But today, it's moved to that 710 rupee mark, which it was seeing selling at those levels. At around 700 or there was a resistance. How's it looking in the charts?
So as I was mentioning earlier, rather than trying to go after the stocks which have not participated in the rally, which we saw in the month of March, stick with the outperformers, something like ICICI Bank, even something like HDFC Bank, which came off sharply in the yesterday's trade. I think they are solid bids, solid winners in this kind of scenario. Indices Bank would be too far-fetched of a call at this moment.
All right, Pritesh, thank you so much for sparing time and joining us with your views on the index and on specific stocks as well. And still 120 points higher on the index, Nigel, and still trying to claw back some of the losses.
Well, that's right. Just do a quick F&O check. Earlier in the trading session, at the start of trade, we had mentioned the PCR had moved to the lower end of the range, which is around 0.76. Now that's moved back up closer to around that 1 odd mark. Why is that? Because, some of those call writers have got trapped on the wrong side. Well, there is put writing that's come back into play. So pull up a couple of strikes at 23,200 put. That's seeing a fair bit of writing in today's trading session. So that one comes up for you on the screen. The 23,350 call, though, that as well is fairly active. So in the near term, just punching in the levels, you have some kind of resistance that comes in at around the 23,450 odd mark. Incidentally, you have the 100 DMA that comes in at that mark. So 23,450, that's important. 23,500, first level of resistance where you have the 100 DMA. If you get past that, then you're seeking higher levels, which comes in at around 24,000 odd mark. But give and take everything, you don't want the 20 DMA to break on the downside, which is around 22,800. So for the time being, it appears we're in a bit of a range. We'll have to see whether or not we break at either of those levels to trend even higher from here on.
Important levels there, of course, the 100 DMA, the 20 DMA. Of course, the 100 DMA is the first level on the upside that the index will have to cross for further upside as well. So for now, still 130 point gain now on the index, 23,300. But as we slip into this break, here's some good news for our viewers. India's business news leader is now just a click away, and that is, of course, CNBC-TV18's all-new app, which gets you instant access to breaking news, in-depth articles, and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that's up on your screen to download the app. We take a short break, back on the other side. Welcome back. And a top mover in today's trading session, of course, is Tata Consumers, and that comes after an upgrade that has come in from Goldman Sachs. Nimesh is joining in to tell us more about this standout brokerage upgrade today. Nimesh.
Hi, Armaz. So, big move on Tata Consumer, one of the biggest F&O gainer today, up 7%, large volumes as well. Largely because after a long time, you're seeing an upgrade on Tata Consumer. So Goldman Sachs has today upgraded the stock to a buy from hold, and they've raised the target price to 1,200. Now, the biggest drag for Tata Consumer in the last few quarters has been the earnings, which have been a disappointment. Now, Goldman believes that that's going to turn, and the company is poised for a very strong EPS growth over FY25 to FY27, and largely driven by a couple of reasons. The first reason is the recovery in the team margins because they've raised prices there. Second, strong innovation and distribution expansion of the growth businesses of Tata Consumer. And the third is lower interest cost as the acquisition debt has been paid down. So these are the three reasons they believe that earnings are going to improve. So on back of this, Goldman has raised the EPS estimates for Tata Consumer for FY26, FY27 by 3 to 7%. And they believe that within the FMCG pack, Tata Consumer is going to report the strongest earnings going forward. So that's the reason why a big upgrade in Tata Consumer, and hence the stock is reacted 700% in today's market.
All right, Nimesh, stay on, of course, because BofA has also, on the flip side, issued a couple of downgrades in the FMCG space, while Tata Consumers has received an upgrade. A couple of downgrades have come in for HUL and Nestle.
Correct. So both has been downgraded, HUL and Nestle. I'll focus on Nestle to start with. On Nestle, BofA has downgraded the stock to underperform now, and they've cut the target price to 21.40. They've cut the earnings as well by 3 to 5%. The earnings cut is essentially because of a couple of reasons. One, the combination of softer demand, cost push and aggression from the competitors. So that, BofA believes will have an impact on the margins going forward for Nestle. To add to it, while there is enough competition, the valuation is still rich for Nestle, and hence they believe that in this context of lower growth and impact on margins, there will be an impact on the earnings as well. So hence, on back of that, BofA should have downgraded Nestle to an underperform, and they've kept a target price of 21.40.
Okay, all right. Thanks a lot for that, Nimesh. By the way, in the last few minutes, the pharma stocks actually have moved up. Pull up a few names. Biocon, that stock has done a U-turn. Big uptick is what we're seeing out there. Lupin's another stock that's moved to the high point of the day. So I think we need to get some of these up for you on the screen. Sharp uptick is what you're seeing. Even Polycab, that's seen a sharp correction from the peak because of fears of competition coming in there, both the Birla Group as well as the Adani Group. But for the time being, that's moved higher, and it's moved higher on very, very large volumes. So that's another name that you should be tracking. And Angel One, I think we'll get that operational update for the past month or so. The stock as it is has pulled back a great deal from the recent peak. From the highs of the day, that slipped a little bit. But let's focus on the top Nifty loser, BEL. The release that came out, it seems to have fallen short of street expectations. Upasna joins in to break it down for us. Upasna.
Well, the stock remains in focus this week also. The company has released its FY25 provisional update, and the company has surpassed its FY25 revenue guidance, but it misses its order inflow guidance of 25,000 crores. Now let's break down the numbers. Now if we look at the FY25 revenue, it stands at 23,000 crore with an uptick of 16% on a YoY basis versus the guidance of 15%. But the company's Q4 revenue came in much lower, just a single-digit growth of about 3% on a YoY basis, much lower than what the brokerages were estimating. Now, FY25 export sales saw an uptick of 14% on a YoY basis, and company's order inflows stood at 18,720, while the company was only able to achieve 75% of its FY25 order inflow guidance, that is 25,000 crores. Now, order book of the company stands at 71,650 crores as of 1st of April 2025, with a downtick of 6% on a YoY basis, and even export order book saw a downtick of as high as 12% on a YoY basis. Now, on the back of this, Nuvama prefers BEL over HAL. It says that it does not see any earning cuts or downgrades on this stock, and Morgan Stanley has also given an overweight call and increased the target price to 364 per share. Hence, this stock remains in focus. Let's see what lies ahead for BEL.
The slight recovery from the lows of the day as well. Upasna, thanks a lot for that. It was down almost 6.5% at one point of time was BEL. Recovering some ground, but still down 4%. And the top loser on the Nifty in today's session, of course, a miss on the order inflow guidance for FY25. On the other side, Bernstein has initiated coverage as well on the two renewable energy names, which is Vari Energies and Premier Energies. Both of them are under pressure in today's session, and that's because of an underweight recommendation that Bernstein has come out with. Vivek is here to tell us more on what Bernstein has to say in their recommendations. Vivek.
Well, what Bernstein is essentially saying is that the sun could be setting as far as, the sunshine that was on the solar PV module space was concerned. What they're doing is they've gone ahead and initiated underweight on Vari as well as Premier. Initiating coverage, they're very positive as far as the entire sector is concerned, but they're wary about possible headwinds that could soon come in. First, let's have a look at the positives. Number one, they're saying that both Premier as well as Vari have made very smart investments. They are pioneers as far as India's solar PV space is concerned. They have the potential as far as an outperformance in the next coming quarters or in the near term is something that is quite promising. And also what they're saying is that as far as understanding that there could be significant competitive pressure, both of these companies are diversifying into energy transition areas such as battery storage as well. However, what are the key worries for Bernstein? Number one, they recognize that supernormal returns won't last indefinitely. They have an underperform rating largely due to the cycle positioning, where they believe that the companies are at the late cycle. They expect deteriorating returns at this point on. High valuations for regulatory arbitrage-based businesses cannot justify the kind of prices that the companies are currently trading at. Along with that, they believe that the industry is currently close to cyclical peak returns on the back of the fact that retail prices are at almost 2 to 3 times global levels. There are low entries to barrier, and they expect significant competitive intensity in this particular space. Conglomerates are coming up with very large capacities in the near term. On the back of that, they have an underperform rating, and they say it's too early to go ahead and assign any credible value to the other businesses the companies are venturing into.
Okay, all right, Vivek, thanks a lot for that. By the way, just want to point out a few stocks actually that are moving around. V-Mart, they joined us earlier today, and the management is sounding quite optimistic about prospects getting into next year as well. So V-Mart is sitting with a gain of close to around 2%, but we have V2 Retail as well. Now, they have come up with an operational update, and you compare the Q4 of the recently concluded quarter with other Q4s. They've given that on the exchange, and it looks quite good because you have 499 crores is what they delivered in the past quarter. If you compare it with the same time last year, it's under 300 crores. And even, prior to that, the numbers are much, much lower. FY23, they were at sub 200 crores, and FY22 as well. Just comparing Q4, well, things are looking good. No signs of a slowdown, I guess. That's why V-Mart is higher, V2 Retail, and Vishal Mega Mart, that's the other one in there. Big uptake is what you're saying. That's one of the top gainers in this hour, in fact. I think we should get a few of the stocks up for you on the screen.
Oh, heading towards the shopping zones as well, our consumers. It does seem like with the updates that they've put out, of course, we'll be awaiting updates from both D-Mart and from Vishal Mega Mart. But in line with what has been reported so far by some of their peers, V2, V-Mart, or even Bazaar style retail, that too is up 16% in today's trade. It seems like these two are also seeing some bit of sentiment impact in today's session. MCX is the other one that we're putting the radar on, and that's after its quarterly business update. Vamakshi is here to tell us more on that. Vamakshi.
Well, Hormaz, MCX did disclose the trading numbers, and the trading activity so far indicates that MCX's transaction revenue stood at 289 crores in the fourth quarter. This is a Morgan Stanley estimate, and this implies a downtick of almost 4% as when we compare it to the previous quarter, and it is also slightly lower than what Morgan Stanley was penciling in. The ADTR, which is the average daily transaction revenue, stood at 3.9 crores for Q4. This is again slightly lower as compared to Morgan Stanley estimates of 3.95 crores. Morgan Stanley has an underweight call on the stock. They have a target price of 3,400 rupees per share, which is significantly lower as compared to where the stock is trading today. They're building in 4.02 crores of ADTR for FY26 and 4.19 crores for FY27. Going forward, they believe that many investors are expecting regulatory approval for launch of weekly options, and they believe that if this does take place, it could mean a potential upside to the forecast that they have given. Apart from that, there's also a note that came in from UBS. They have a buy call on this stock, but they have gone ahead and reduced the target price on this counter from 7,800 to 7,250. They believe that the volumes indicate a soft quarter is in for the company, but they're expecting the situation to improve from here on. Overall, they're estimating that Q4 revenue could see a decline of almost 5% sequentially. However, continued volatility in key commodities and new products are likely to support growth for MCX. So as of now, the volume data for Q4 does not indicate a very good quarter, but the expectation is that the performance for MCX could improve going forward. Resultantly, the stock is trading higher.
Indeed, 3.5% higher on MCX. Vamakshi, thanks a lot for that. Take a short break. More on the markets and specific stocks on the other side. Stay tuned.
I think the first thing we have to address is safety and hygiene. I think we have to be perceived, and we'll only be perceived if we are a very safe place to travel for everyone, including particularly women travelers. So I think we all know there have been enough incidents, they keep happening. That has to stop. Otherwise, what happens, we'll have two kind of tourists. We'll have the super rich tourists who come and have the 5-star premium holiday, rose-tinted glasses, blah, blah, blah. They go see everything. They don't really feel India, but they're seeing a very sanitized India. Or you have the backpacker who's out in the hills and doing whatever they're doing, coming from wherever, etc. That's so you don't have the classic middle class.
And there have been stories, Shireen, believe it or not. I mean, I remember those moments because when IPO happened, they suddenly started going back to their records and saying, where's that damn paper that you had?
Where's that piece of paper?
Where's that piece of paper? Because nobody really realized that it had any value. And some of them came back and said, we've lost it and can we just get it back, right? So it was really, really good to see.
They probably didn't think that anything would come off it, right? So you're tucked away in some files
luckily
somewhere.
finance had all records and everything's electronic. But yeah, people were like that. I remember them coming saying, "Aapne kuch ek wo diya tha, letter nahi mil raha." They were scared. It's gone.
So you're the big daddy at Make My Trip, but you're also the big daddy for the startup ecosystem.
Yeah, from young Turk to not so young Turk, 25 years. So I think we all grow up. Now that you showed me the old young Turks we did.
Yes.
And you and so Shireen and CNBC, you might be our good luck charm. So you've seen us through thick and thin. And I officially want to thank you for being a huge supporter through our toughest times. So, we recall that and don't forget when people, help out when in the tough times. So thank you for that.
Well, Macquarie has identified a set of high conviction investment ideas categorized into 3 segments based on time frame and fundamentals. Hormuz has popped across to the big ball to tell us more. Hormuz.
There is a long list of stocks that Macquarie has come out with recommendations for the short as well as the long term. Now, it has clubbed its list of 18 stocks into 3 buckets. One, which is opportunistic or tactical ideas with a 3 to 6 month time frame. The second one are stocks that are part of their core portfolio holdings and that are backed by strong fundamentals. And the third one is where they highlight some mid-cap and small-cap names which have the potential to double in value over the next 3 years. So let's start off first with the short-term tactical ideas. And first up is Reliance Industries, where Macquarie has a target of 1,500 rupees. And they say that a recovery in the retail segment revenue will be a key sentiment positive for the stock going forward. The other one that they have on the list is NTPC, where Macquarie is seeing a 35% upside. And they are adding that this heat wave warning by the IMD is making a case for building long-term power-based capacity going forward as well. The third one on the list is Wipro. And here Macquarie is seeing a 25% upside on a healthy dividend yield and prospects of growth converging with its peers, something that the buy side has not yet factored in. Tata Motors shares are oversold according to Macquarie, and JLR turning net cash, better margins and a focus on premiumization is likely to aid its near-term upside going forward. Now, BEL missed its FY25 order inflow guidance, but Macquarie sees this as just a spillover and anticipates a strong FY26 for the stock. Now, Shriram Finance is the other one where Macquarie is saying that it's a valuation catch-up, and at the current price, it is trading at almost a 50 to 60% discount compared to some of its larger peers. So that is also among in the list for Macquarie. Now, moving on to its core portfolio holdings, Macquarie has called TCS a marquee buy, and it is expecting a 15% EPS CAGR over FY25 to 27, and that, along with an attractive ROE, makes it a compelling investment case, according to Macquarie. Now, HDFC Bank will report EPS growth and ROE in the high teens over the next 2 years, according to Macquarie, thereby driving their conviction as a marquee buy on HDFC Bank as well, with a 2,300 rupee price target. Another one is Sun Pharma, which is also a marquee buy for them, as it is expecting a 16% EPS growth and an 18% ROE over FY25 to 27. Now, the brokerage is expecting Mahindra & Mahindra to deliver industry-leading passenger vehicles volume growth, and its core valuations also has an upside risk due to this consistent growth, growth and ROEs. Now, Macquarie had recently initiated coverage on Trent with a 7,000 rupee price target. Now, it says that competition concerns here are excessive and that the current weakness is an attractive entry opportunity in the stock. Now, the brokerage also sees re-rating scope for Power Finance Corporation and says that its valuations are currently inexpensive and has a target of 660 rupees on the stock. Lastly, they have identified 6 small and mid-cap names that have the potential to double in value over the next 3 years. Those include the likes of IRCTC, Uno Minda, Aditya Birla Capital, and Devyani International, Delivery, and Lemon Tree Hotels. Yes, 2 foreign brokerages had last week set out with their shopping bags for Indian stocks, and now Macquarie has added 18 more stocks to that cart.
Okay, all right. Thanks a lot for that almost interesting one coming in from Macquarie out there. Well, time to slip into a short break, but on the other side, Manish Gupta joins in with Kunal Shah of Nirmal Bang. Stay with us.
Welcome back. Joining us now is Kunal Shah from Nirmal Bang. Kunal, hi, thank you so much for joining in. And I want to start with gold prices first. And while we have seen an outperformance there, it seems to be taking a pause, a breather perhaps, ahead of the US tariffs announcement today in the evening. What's your sense? What are the kind of case scenarios that you are working with? And how are you looking at the gold prices life after reciprocal tariffs?
Okay, so I generally try to give you a clear view, and my clear view is it's time to book profit. So I'm of the very firm view that all the positive news, because of which gold should have been at $3,100 by the end of the year, in the month of April only it is at it has tested $3,180. So I think that all the positive factors like tariff, rate cuts, everything is priced in. Central bank buying, everything is priced. ETF buying, each and every good news is in the price. So even though I don't know what Mr. Trump is going to do tonight, but no matter what he does, the likelihood of gold opening down is very high. So for the first time, I'm saying that it's the time to take profits on gold. And if you are having a good inventory with you, you can perhaps hedge your positions by going short on the Pharma contract. So I think it's the time to take profit, and gold should be witnessing at least $100 to $150 of correction, profit taking, whatever you want to. $2,850, $2,800 are kind of downside, which you can see over a period of time. But the trend is not going to be upward going forward, no matter what Trump says.
So are you saying that the all-time highs for 2025 are done with?
I think, yes, we have seen all-time high as per me. And the possibility of, see, what has happened is that after a 35% rise in gold prices, everyone is realizing and coming up with target of $3,500, $3,600. Doesn't make sense. They should have identified that kind of target at $2,000. So now trying to catch up $100, $150, not a big deal. So I think it's a time to book profit. The gold has become a consensus trade right now. You ask anyone what is the fundamental outlook on gold, everyone will say it looks bullish. So from the behavioral aspect also, I see that there is quite a bit of consensus that gold is going to go up and up and up only. But the fact is that the actual demand is faltering quite sharply. People are coming to jewelry stores to sell their golds. So I think it's an inflection point in gold market right now, and it is asking for a correction. And I think it should come in a matter of next 10, 15 days or 1 month's time. So timing is not something which I can predict, but the likelihood of profit taking is very high in gold.
Kunal, what's your sense on silver then? Because even as gold has taken a step back, silver underperforming gold in 2025 till time. Are you looking at further corrections for this one too?
I would recommend somebody who's been holding gold and booking profits, invest in silver. Same amount you should invest in silver, because silver is going to outperform. It's just a matter of time. A commodity which is in a deficit from last 4 years, and the industrial demand of the commodity is growing at a double-digit growth rate, especially from the clean energy segment. Silver is 100% underperformer. It's just a matter of time when metal takes off. The fundamental outlook of metal is also bullish. No matter this Trump volatility, whatever it comes, it's the right time to accumulate silver, and silver is poised to give you at least conservatively 10 to 15% return in a matter of next 6 to 7 months.
And how are we looking at the rest of the metals as well? Because we've seen some pause coming in here. Copper, after making those all-time highs on COMEX, and as would have been the case, has seen some profit taking. But same has been the case for the rest of the metal pack as well. Slight directionless trade happening there for the last couple of sessions now.
So the reason why metals are witnessing profit taking is because of the tariff effect. The actual consumers of these metals in the US are shying away from the market. They have done the stocking of inventory of copper, aluminum, zinc from last 3 months, and now they are waiting what Mr. Trump is doing. So it's because of that the actual demand has gone down a bit, and that's why we are seeing the profit taking. But the ultimate call on metal is bullish, because what China is doing is very important, not just US. And China has clearly mentioned that they are going to add copper, aluminum, zinc in their strategic reserves. So these are small profit taking, small correction, what you are seeing in metals. The directional view in metals is bullish. And I am expecting another 10% upside in base metal prices in next 6-7 months. And whatever downside you are seeing right now, or tomorrow, if because of the Trump's announcement, if metal goes down, that will be a great opportunity to add metals. The fundamental outlook for metals for the year 2025 remain very bullish. The outlook on the US dollar is quite negative. So because of that also, you are going to see a funds coming and buying metals. So I think it's a time when outlook of industrial metals looks pretty bullish to me.
So, Kunal, what you're telling us is that book profits in gold and invest that money in silver for sure, and some part of that in metals also. Let me throw another scenario to you, and there are also concerns about recession or even stagflation coming in for the US markets. So even as you're bullish on China, with US perhaps not throwing out those kind of numbers, would that cap many gains for many metals?
So yes, because 50% of the industrial demand of all these metals coming from China. So US stagflation, recession is far off. US has come up with 2.5% GDP growth rate last quarter. So there's no question of recession, at least for next 6 months. Next 2 quarters, no possibility of recession. After that, nobody knows. But I believe that this tariff thing which is going on and this slowdown which is coming in the US, this will be used by the US to roll over their debt. And once they roll over, their bond yields goes down and they roll over their debt, believe me, they will start with another interest rate cut cycle, no matter what is inflation. So they have another $3.5 trillion of debt maturing in 2026. So totally their debt next year will be $10 trillion. How interest rate can remain at 4%? So no matter what happens, interest rates are going to go down. And that remains very strong. That remains very strong reason why industrial metals, why land, why industrial commodities are going to do well. Commodity as a complex going to do well. Gold also, I am expecting a profit taking. I'm expecting a correction. I'm not saying it is going to go for a structural bear trade. So commodities will continue to remain in focus, and they are the best to remain in this kind of uncertain scenario. That you should have some portion of your wealth in commodities or commodity stocks.
Right.
Tangible it is.
Very strong words coming in there from Kunal. Thank you so much for joining in this afternoon. Manisha, thank you for joining in as well. Book profits in gold, invest in silver. That's the word from Kunal Shah of Nirmal Bang. But we call time on this edition of Halftime Report. Business Lunch for the next 30 minutes.